Hi there, good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah and well, a bit on the markets and a bit on commodities as well, because commodities, despite the fact that they've come off a little bit, are still trading higher. So US stocks end the quarter with the worst performance in 2 years, by the way. This quarter was the worst quarter in 2 years. S&P 500 index declined about 4.9% in the first 3 months of 2022, and as a result of which this has happened. And by the way, oil has dropped quite a bit as Joe Biden has released some key strategic reserves. So keep that, all of that at the back of your mind, that data, as we look at some charts. So the US markets came off in yesterday's session, even though actually the futures are trading well, by the way. So there's a bit of a green shoot, if you will, in that while the markets didn't do all that well yesterday, the futures are trading okay, and that should be construed maybe as a mild positive. But what is done really well, if equities have done horribly in this quarter and in worst quarter performance in 2 years, commodities have had a merry run. This has been a really strong quarter for commodities in like multiple decades. That's quite stunning, right? Look at it. The largest bar before this went back all the way to 90 to 94, that quadrant. That tells you how strong the performance of commodities was this time around, and therefore the pressure on margins that is anticipated. I must tell you, viewers, any company which tells you, or when it performs, is able to do cost control and show better margins on the with commodity price inflation, you got to believe that the company is pricing power and that company should be rewarded. It's as simple as that, by the way. So you will see some do that, by the way, and which is why it becomes very important, this quarterly performance. What about Asia and the SGX Nifty? I reckon some soft showing is the order of the day. So I see that it's a bit of a mixed bag in the session today. CSI 100, ASX are doing okay. The others are not, but I suspect SGX Nifty, when it comes up on your screen next, will show you that there is a bit of a pullback to be anticipated in the SGX Nifty in the session today. So about 100 odd points down tick anticipated in the session for the SGX Nifty. So not surprising really what's happening here. Now let's take a look at what the trade setup for the day is looking like. Excuse me for that phone call. Yeah. So I think a risk-off Friday is likely, with indicators pointing to slightly overbought levels. Remember yesterday I was talking about how that zone of 17,600 to 17,700 was going to prove to be a key resistance. So as much as support as 17,029 or 17,000 or the 200 DMA was, that zone from 17,550 to 700 proving to be a key resistance as well. I think the technical setup still construes the formation of higher highs and higher bottoms, and therefore it is not all downhill. But yes, certainly a little bit of overbought conditions, maybe a bit of a cool off warranted, and we're likely to get one in the session today. In among spaces aside of the APM gas price ones which we alerted yesterday and which I'll talk about today, auto sales today will be the key thing to watch out for in terms of news since 9 a.m. And CV companies are expected to log in the strong March, but we'll start off, of course, with the Bajaj Autos and the Escorts and Marutis. Those three will come in the first 1 hour. From 8:45 to 10, you'll see these three names come out with the numbers, and they'll set the tone of what the numbers are likely to be. At the end of this trade setup today, viewers, we'll give you a snapshot of what some of the numbers are expected to be, at least as per what Nomura anticipates. Fund flows, FI has bought about 3,088 crores and DI has bought about 1,145 crores. But by the way, this is an optical illusion, if you will, simply because the buy number is because of the max block deal. As a result of which the number looks inflated. Otherwise, it was not an actual buy number from FIs. I don't have the adjusted number, but certainly, even if it is a positive number, it's not as high as 3,088 crores. So keep in mind that this is a small clarification that I wanted to give. Nevertheless, in terms of stocks to monitor in the session today, keep in mind the market is going to be soft, so you got to be mindful of the long trades. But the domestic APM gas prices have been hiked from 2.9 per MMBTU to $6.1 per MMBTU, and No, let's first get the actual numbers. Yes. So the gas price hike is $2.9 per MMBTU to $6.1 per MMBTU. The ceiling for gas from difficult fields has been raised to $9.9 per MMBTU from $6.1 per MMBTU. Now, what's the impact, right? Let's first do the impact, and then I would just urge Virat to maybe get in after this. Let's first get the impact, the Motilal Oswal note on the gas price revision, and then if we can get the price chart of Oil India after this plate, it'll be really nice. So first, the impact. So prices are broadly in line with the assumption as per Motilal Oswal and do not change any of their earnings estimates. The $1 change per MMBTU would result in a 10% change in ONGC's consolidated numbers and Oil India's standalone FY23 EPS. So $1, 10%. There has been a $3 increase. So that's the commensurate increase in ONGC's consolidated numbers and Oil India's standalone numbers. The question you got to ask is how much of this is already in the price? Now, let me get to that in a moment. First, the impact of $1 per MMBTU would result in about 3% FY23 EBITDA for GAIL, ceteris paribus, and a change of $1 per MMBTU would necessitate a 4 rupee per kg change in CNG and 3 rupee per SCM change in the domestic PNG prices. There is a small mistake that we've done here, that I have done here, viewers. This the third line, which is that impact of $1 per MMBTU would result in a 3% uptake. That is for GAIL. So for GAIL, you would probably see about a 10% uptick in EBITDA. For ONGC and Oil India, there could be about a 30% change or a 25 to a 30% change in the earnings for FY23. This is as per Motilal Oswal. And of course, the impact on you and me, the prices of CNG that we pay in our homes or in our cars, or PNG that we pay in our cars. Some people have liquid petroleum cars, if I'm not wrong. That, or of course, your liquid LPG or the PNG gas cylinders, that will change quite materially. So our gas bills will go up quite substantially. So you got to be mindful of all of that. Now, the thing is, since we are focusing not here on the social aspect but the markets aspect, I just want to keep viewers abreast of the situation that some of the stocks have shown in an uptick. This is the now that's a good price, that's a good chart. So this is the Oil India chart, and this had rallied significantly in trade yesterday. So keep that at the back of your mind. Some brokerages, of course, have much higher targets. For an ONGC, the targets for Morgan Stanley are much higher. For Oil India, some other brokerages targets are much higher, JP Morgan, for example. So all of that has to be kept in mind, that the fundamental targets are much higher. And if indeed there is a gas price revision in October, then it may augur well for these companies. But from a trade perspective, you always pay heed to a price move that has already happened. In an Oil India, for example, the price move already happened yesterday. So be mindful of that. I'm not suggesting one way or the other whether Oil India will correct or whether Oil India will move higher. Fundamentally, there's a case for it to move higher, but keep in mind that there is a move that has already happened, and therefore there could be a corrective move that could come in as well. So if you're trading, be careful by trading into the ONGCs, Oil Indias, or the city gas distributors as well, which optically get impacted, but they have pricing power, and therefore they will pass on this price increase very, very comfortably to users, end users, and therefore it will not have a material impact on their earnings, most probably. So this is the big thing that happened yesterday. By the way, speaking of oil and gas price revisions, HOEC, which had started the production trial runs for the B80 block, has encountered operational issues in the commencement of production at the B80 block. Remember, this is a big, important block because it has a production capacity of 8,000 BOEPD. And therefore, it's very, very important from HOEC's perspective that it starts sooner. So clearly, if they delay this even further, if it gets delayed further, then it postpones the earnings for HOEC. That's the limited point that happens. But you never know. There could be a bit of a negative reaction on this one, considering that crude prices also have come off a little bit. Maybe not the best of days for HOEC. What about Mumbai-based real estate companies? I've named 3 of them. There could be many more as well, or there will be many more. Prestige now has 4 large projects in Mumbai getting launched. But Feb and March 22 have reported a 25 to a 30% rise in Mumbai project property sales, The total registrations are likely to be about 35 to 50% higher in Q4 than in the rest of the quarters in FY22. This is as per registry data that is analyzed by MOTILAL OSWAL. And therefore, it's interesting to see that some of these companies, and they're taking advantage of all the relaxations that the Maharashtra government had put out before 31st March. And therefore, I think the registrations will be substantially higher, which would mean, effectively, viewers, that sales for these companies in Q4 would have looked very strong. Most of them, if not all of them. Watch out for them. Lupin, the US FDA has concluded an inspection at the company's wholly owned subsidiary, Novel Laboratories. Lupin says that it contributes only 5% of global revenues, and they don't believe that it will have an impact on the distribution of supplies of the existing revenues from the operations of the facility. So let's wait and watch. If Lupin reacts negatively, you know why. Sunidhi Securities came with a note on India Glycols, wherein they have said that the company's begun trial runs at 180 KLPD grain-based distillery in Uttar Pradesh and will begin from 15th of May. So maybe this quarter, which is quarter one, FY23, will probably see increased numbers from India Glycols because of this distillery as well. 15th May, which would mean that nearly half of the quarter will see probably contribution from this distillery as well. So watch out for this one. And Gokaldas Exports, they expect a 2-week delay on imported raw material delivery schedules from a planned date. Shows that some of the large players as well, Blackstone company, Gokaldas, I presume even now, have issues with regards to logistical supplies. Last but not the least, the auto sales estimates, as I said, that we bring at the end of the trade setup what is anticipated from auto sales this time around. And this is as per Nomura, of course. Look at the bottom of the screen. M&M Tractors, big negative number anticipated. Hero MotoCorp and Bajaj Auto, negative numbers anticipated. So two-wheelers and tractors, weak numbers. M&M Auto as well as Tata Motors will probably show fairly healthy growth numbers. Not as much for Maruti, Royal Enfield, and Ashok Leyland. But the key is, viewers, if you are a trader, you keep in mind some of these numbers. And if the reported numbers are slightly better or slightly worse, then you know how you can trade some of these stocks. But yeah, this is the snapshot really. Moti, some of the polls might be slightly different, but yeah, in or around these numbers is what the estimates are. And therefore, you know what to expect when the companies come out with the numbers. So usually, these estimates are pretty accurate, really. So let's wait and watch. But keep in mind, it's a bit of a risk-off day today. You have to be careful with leverage longs, at least for today. We'll give you fresh updates about Monday on Monday. And yeah, the good news is that India cases are much lower. Maharashtra has decided that from Gudi Padwa onwards, outside restrictions will be taken off. We hopefully are now in a post-pandemic world. Having said that, if you're stepping out, stay safe. And thank you so much for tuning in today to the Trade Setup.